How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 40 to the Asian Session Library. Once again, with the pair US dollar versus Japanese yen. Monday night on the 26th February 2024, we had a successful Asian Session model. Let's walk through it together. I've already annotated our buy side liquidity pools residing above swing highs, and our sell side liquidity residing below swing lows. And that's the last one right there. What we're looking for is the market to purge one of the sides and revert back to the opposite side that's available. So if it runs buy side at said point, we look for it to revert back down to sell side, some type of reversal or a turtle soup pattern, or vice versa. That's the whole idea of this model. We're going from a 15-minute time frame down to a 1 minute. You can look for a 5 minute, 3 minute, 2 minute, or a 1 minute, as I prefer, as an entry technique. But everything starts from the 15-minute time frame and down. So let's see what happens. Play it forward. You see price purges, sell side liquidity. At this point, I would be stalking a setup. It is also crucial to notice that we're below the Asian session open. Anything below the Asian session open is going to be a discount. It's going to be oversold. We don't need any indicators to tell us that because the price action is going to tell you everything you need to know. Let's go down to the 1 minute and let's see what happens to price as you continue to play it forward. So we're looking for a fair value gap that breaks a swing high. That's the entry technique. Not just any fair value gap, a fair value gap that breaks a swing high. That's my personal entry technique. You don't have to adhere to that, but I'm just showing you publicly what I do. And there we go. There goes your entry technique right here. It happens very late in the session. Recently, we've been seeing a lot of later entries in the session, which isn't always the best, but it's a sacrifice you have to make. There it goes. A fair value gap that runs through a swing high. We're going to be looking to go long on a 1-to-1 scenario. So 15 pips for 15 pips. Within that accordance, you'll be risking whatever you want, 1%, 2%, 3%, whatever your risk appetite is. Notice this entry technique is forming below Asian open, meaning we're in a discount or oversold conditions. In oversold conditions, it is best to find buying opportunities, but we need context. And I'm giving you the context through via the New York lunch session, liquidity pools, and it purging sell side and being cheap and oversold. There, we wait for a price to hit the top side of that fair value gap to go long or the premium side, and we would hold. Now, this entry or tonight's example had ended in only getting 10 pips into profit. It did not hit our desired goal of 15 pips, which is okay, but I always tell people to pay the trader. Notice as well, this goes on into IPTA True Day going into Tuesday after midnight opening price. You can even see how price drops below the midnight opening price for a quite bit, and then it runs higher. And after getting or hitting 10 pips, price declines lower going into the London session, 2 a.m. to 5 a.m., and ultimately stopping us out. But it's very crucial to understand that even with a model or a working framework, nothing is guaranteed or 100%. To me, 10 pips is a successful Asian session model. 10 pips is all you would need. Anything beyond that is just a cherry on top and then some. But always remember, your hard work needs to be paid off for. You need to take partials, move your stop loss to break even or your entry point. So if your stop loss is down here and you get 10 pips, you move your stop loss to your entry. You move it all the way back up there. I will always try to take partials at 10 pips. I would set an alert at 10 pips. And as soon as my phone goes off, I pick up my phone or I open up my laptop and I take the partials, move my stop loss, and relax for the rest of the session and let the trade do what it has to do. If I get stopped out, it's okay because at least we paid something towards our account and we're able to move on. We didn't take a loss because imagine not paying yourself here at 10 pips. Think about it. If you don't pay yourself going up here and you come back hours later and price stops you out, you would be upset knowing that you were at least in some type of profit and you were able to take something off, take a portion of the cake and move on. Hopefully, you find this insightful. Peace.